Welcome again to OMG Market Analysis for Beginners. Today's beginner discussion is about how to create a market dogma, which we're going to go through our dogma. We've kind of been formulating it, reviewing the previous things, reviewing last week, talking about the news meta, what the stories are, which are sometimes backwards. And my example of that is that the previous discussions about the summer market rally, which had a high that hit over 50%. And everybody suddenly said out of the bear market. And you saw a bunch of news articles that talked about being out of the bear market. They were totally wrong. Now we have discussions creeping up of defensives and market lows. Where is the new bottom going to be? How much further is it down? And these are, when you view multiple news articles in a row, you see these trends in meta discussion. And you want to take note of those because sometimes the market moves in opposition of those. Also, always look at the economic calendar for the week coming up. I don't have last week's calendar, which sucks. And then this little study on moving averages, weekly, daily, NDX, SPY, Dow, Energy ETF. It has crossed over the 200-week, which I stumbled on by accident. And then our special topic, thinkScript, from TD Ameritrade Thinkorswim platform, which I don't use for trading, but it's cool, and I wanted to go through how it works and what my experience of it is as a programmer. First time I opened it up and just started randomly typing crap. So that's what we're going to do. So let's jump right into the calendar. So for us beginners, we should just look at this. We don't know what most of this stuff is. The red ones are supposedly more important. Natural gas report, construction spending, IMS manufacturing, jobless claims. This is supposedly the biggest one, right? And then unemployment situation. That's really the most, probably the biggest one. Consumer confidence. So you want to click on these and read them. They're not that interesting, actually. They're just a short little blurb. So that shows what the consensus was, what the prior was, and when the claims go up, that's the claims of unemployment. So when they go up, that means that unemployment's going up, which is to be expected as we edge towards recession. So jumping over to our next thing is, so that was the economic. Jumping over to FinViz to look at all of our heat maps and stuff. I purchased the Elite package, which is like $40 a month. So we wouldn't have to see ads, basically. But it has a few other perks. Beginners are winners, losers. This is the only one I'm really aware of. Neurosciences, they discovered something, some new cure or treatment for a lesser known illness, so you might want to look at that. It really spiked up. Okay. News, scan the news. I'm going to try to speed this video up on YouTube, so hopefully my low voice will only be a middle voice and not too high. High interest rates. The Tetons Summit where Jerome Powell spoke at the end on Friday, he said the same shit. He said exactly the same stuff he was going to say before. The only difference is that he mentioned Paul Volcker, which is a really big, deal, because that was the most eventful thing in our economic history, is Volcker raising base rates above 10%. And the fact that he would mention that name in my book says something. So go watch it. The heat map for Friday was all in the red except for EA Sports, which may be rumored to be getting bought out by Amazon, who was also down 5%. But if EA Sports gets bought out, everybody thinks that's exciting. Also, Take-Two Interactive, which must be somehow related. So when you ever have a case like this where everything's in the red and one thing's in the green, you should probably go read up on why. Because it might be a story you might want to follow. Google, Amazon down 5% each. That's huge for one day. Walmart, it's just across the board, except energy here is not down very much. It's very muted red. Group screener, I love. Energy, everything's in the red. Energy's still killing it for the week. Energy killing it for the month. 3-month, energy in the red, which is a very strange turnaround since the year and the half year and the full year are both energy green as well. So there was a real turn away from energy. It took a big reset. And then now it's back on again, green. One day sectors is, you can click on these to see what makes up that sector, kind of, and do some filtering here. Okay, so let's move on to futures. Always look at lean hogs and feeder cattle. Feeder cattle are 600, 800 pound cattle that are done being calves, and they're now being promoted towards live cattle, meaning they're getting fattened up. Live cattle is ready to eat your hamburger. Everything in the red, VIX in the green, which makes option prices higher. These futures are in the green. Talk about that, but maybe sometime we will. Okay, on to our charts before we can get to our scripting. So I always have these set on one day as the standard thing, and as you can see, we never even got to our 200-day average in the summer rally. So this is strength, but then we pull back, and this is today's big red, which dropped below the 20-day. And then if you look at the SPY, Standard & Poor's, it's similar. It's very similar to the NDX or the QQQ. They follow basically similar movement, but they're not exactly the same. We're going to look at that for a second. So we look at the NASDAQ. I accidentally clicked on weekly, and I was stunned that for what I had selected, it has never touched the 200 week, which is 4 years. Never, ever touched it. When we got down there this year, we still didn't touch it. So it's like, oh, well, this crash comes up this week. It may not be that bad. I mean, that's only like 9-10%. Never, ever, ever, ever. Even in COVID, didn't touch it. But go way back to here, and it did touch it. In fact, this was the 2008 recession, and for an entire year, it plunged way deep below the 200 week, and so did it in the dot-com bust. Boom bust, whatever you want to call it, whatever you want to call this ridiculous spike. So you can see when you're looking at a time period, it's very easy to say, oh, that stays up there for 10 years. It stays above the red line for 10 years. It's basically never, ever goes below. No, it does go below. It does go below, and when it does, it's bad. Okay? So the 200 week is something that you never see. You just don't see. Most people haven't been paying attention to economics for that long. And it's very strange to see things get flipped around when you go to the weekly. Let's go back to the daily. But when we look at the SPY weekly, it actually did touch below during COVID. So that plunged through, but the NASDAQ didn't. And then here it didn't. So let's go back to the daily real quick. We want to get through this fast. NASDAQ's daily, everything gets reversed around. Here's our 200-day. Okay, and we dropped below this earlier this year. We came up for air for a second, and then this summer rally tried to come up for air and did not make it. Okay, so now we're down here. My screens are a little weird. And we took a big plunge. We want to know how far down we're going to go. Okay, that's the meta of where's the bottom. Well, it could be pretty easy to say that it's going to be, oh, I don't have my drawing tab thing on. Darn it, next time. It's going to be down here, would be the most obvious thing. But just like this one did, but then will it go down further? Or will it, this isn't a great trend. When we look at the difference here is we didn't get to the 200-day. We really just didn't get to it. You can see that the life of the NASDAQ and the tech-heavy index is just sort of, it's choking out. And the S&P looks a little bit more healthy. It actually got back to the 200 and then did the same. Other than that, they look very similar. The 20 touches the 200 here in April. Here, the 20 does not touch the 200. So you can see that's probably not a good sign. I don't know. You look at this stuff as a beginner and you think, and you're just getting used to looking at it. The Dow also had a big red day, but it was within the range, its recent range. It's because the Dow has more defensives in it, and it has more energy in it as well, I believe. And so we can see we're already below the 200-day. We've been, okay? We didn't touch it. We're just down, okay? So we don't know what all makes up the Dow. I don't anyways. But when we go to just the energy sector, this is the interesting one. We had our summer rally, and our red day here on Friday wasn't that big in comparison. It doesn't stand out that much. We're not seeing these. We've crashed right through our 20-day. Crashed right through our 20, right? The Dow kind of is at its 20, close, and then the energy sector is way above. The energy sector looks solid as hell. Okay, so if this would be a defensive choice, it doesn't mean it can't drop some more, but it doesn't look like it's dropping as much as the other ones, and it seems to have more upside because it's I don't know. It's just something to look at. Compare the two side by side, perhaps. Look at the volumes, do all that stuff. Anyways, that's it for that. Let's go to our scripting segment. We open thinkorswim. You download it, log in, open, choose paper trading or regular money. I'm in regular money trading, but we should be in paper trading. It's just because the scripts I was playing around with were on this side. Where is the... It's going to be interesting when I speed it up. I'm going to speed it up. I'm not even going to care now how Mickey Mouse makes me sound. So what they say in the tutorial, if you go into education and you go to thinkScript here, okay, it brings up a thing and says, do this, do this, do this. Okay, it says go to Chart, Studies, Edit, Studies, Create. So that we're going to do that part here. There's a place where you can actually have it order for you based on certain conditions. I haven't learned that yet. There's an add order function, but you'll see what the functions are here in a sec. So let's just do this first one. Studies, Edit, Study, Create. Charts. Here's our basic QQQ. I'll change it to NDX since that's what we were looking at for chart. I took away the volume. And it says go to Studies and Edit Studies. And here we have all these presets. And I have lost, oh no, I didn't lose my work, good. Okay, they saved it in the cloud. But that's okay, we're just going to start by creating a brand new one. Create. And we get this programming language, which is weird. It's a custom programming language that looks a little bit like C# or JavaScript. And it has keywords. And you can look over here to see what some of them are. Tech analysis, highest. They have a bunch of built-in functions and fundamentals. But let's not even go there. What I did was I just wanted to see what happens if you just plot the close. Okay, so plot data is going to plot the closing price of what? of your period, whatever you have set for the day, for the 5 minutes, for the year, for the weekly, whatever you have. It's the closing price. I'm going to change this to high for the day. I just happen to know how to change that because I already was playing with this. I hit OK. And then my new study is called New Study 0. Okay, I'm going to move it into the lower. What that's going to do, when I hit apply, you see I'll put it down here in the blue. So I could have it up here with the price, and it maps out identical because it's like the closing price. So that's what it is. If you zoom in, you see it's the high. So it's the top of each of these bars. So that's interesting. So if we go back to edit it again, and I don't need to keep opening this window. New study. I'm going to rename it because I want all mine to show up at the top so I don't keep having to find them amongst all those. I'm going to say right click edit. I'm going to change it. And this is just a little programmer hacker thing. I'm going to put AA in the front. No price, Josh, and apply. Now I got this high price. See how the graph is on the top of each bar? Now let's edit our script. Now my things are up at the top here. See there? I don't have to go search for it or scroll down or anything. I can just... And I'm going to say let's plot the low. And this plot data is always going to be there, at least for now, when we're doing a study on a chart. So now the line is on the low of each day. Or this is not, it could be minute. You know, it could be, well, to change our period, we have to go here and change it to the 30 minutes. So now we have a different, totally different chart, but it doesn't matter because it's basically the same idea. It's any period you want it to be. I'll go back to day because I like day. Don't get too focused on minutes. So once again, edit studies. It's really good in programming to have to repeat the same shit over and over. Don't try to stop yourself from doing that. It's good for you to do that. So price, Josh. So now let's say I want the middle price, right? Close is the end of the day price. Open is the beginning of the day price, right? Open, right? Like that. If we go open, we're gonna get. I don't know how to make this float so I can zoom in. See how on this one, on this day, it opened at the top and all the red was during the day below it. All the trading happened below the open. Here the open was at the bottom and all the trading happened above the open. And the open is in the morning. And so it could be anywhere in the middle. It could see here it's in the middle. But if the close is below the open, it's going to be red. If the close is above the open, it's going to be green. That's just about charts though. So now let's get in here and let's do some more. Edit. What if I wanted it in the middle? Or what if I wanted a weighted average or something? It starts to get mathematical, right? Because you have to think about, you're thinking about intraday when this is a daily chart. And so it's kind of confusing. What if I did open minus close? Because if the open's 100 and the close is 99, that's going to be 1. That's going to be weird. When I hit apply, what I get is this down here is our thing, this blue line. Okay, so let's move it to lower so that this is the same opus minus close. You know, sometimes it's in the negative, sometimes in the positive. When did it open higher and then went down, and when did it open? It's confusing. You got to think it through because now we're really getting in. It just shows you what you can do here. What if I wanted the midpoint? Okay, what we do is we say open plus we don't use open and close. We use the top and the bottom. So high plus low. And this is some math, averaging you learned in high school. High plus low is going to give us double the price. You know, if it's the high was 99 and the low was, if the high was 100 and the low was 99, what we want is 99.5. But this is going to give us 199. So we need to divide by 2. High. Now we have a graph that is, if we move it back up, we see that it's in the middle. Every single bar is exactly in the middle of the top and the bottom of these little sticks. It's not of this portion. Okay, now that's an interesting thing. Now we can do something like let's see, we want to do more with this number, but we don't want to get too complicated. So we say define mid 1 equals high low divided by 2, and then we say plot data equals mid 1. So this is a variable, and then we stored that value and then we're plotting it. That just doesn't change our graph at all. Let's say we store the value and then we define average or EMA of mid 1 equals, and you have to look up these commands, exponent or exponential average, which is the same as moving average, is very slightly different. Mid 1 for us beginners anyways. Then we got to put the period, the amount of time. If we want to go 20 days back, 100 days back, 200 days back. The default I think is 9. So I'll put apply, and nothing changed because this is a variable, and I didn't use that in my final plot data. I just plotted this again. So I got to move this variable down to here. Now we've got our moving average, and it catches up just kind of like when we were looking at the 20-day moving average. It catches up to it. It goes below it. If we want to change this to 40, it's gonna change it a little bit. Let's zoom out of this a little bit so that we can see what the hell it's doing. Damn it. Okay. So this is the very, very touch point of the beginning of how you do this. So we're just creating stuff that you can already pick from. You can already pick a study from the pre-built ones. But I'll show you. They don't have like a 70 or you have to, or 100, and they just have the ones that are pre-built. So if you eventually get to the advanced point where you're building simulations of trading, you could play around with making decisions on different crossovers of different EMA, SMAs, and you could find one that works really well, and it could be some strange number that they don't have in their settings. That's why you do this. You're basically like building your synthesizer from the ground up with the raw transistors, instead of like just picking from 3 different models that are on the shelf. Let's see. Oh, one more thing. We can get the price of a different ticker. All these are doing the price of whatever ticker I chose up here, the NDX ticker. But I can also do ticker 2, and I can say close of, let's say I want to Walmart, right? Now I want to say plot data, EMA mid minus ticker 2. That's really weird. They moved, right? Well, because we're at 14,000. Okay, so the NDX is at 14,000. Let's get something that's a little bit more like a number that's closer to Walmart. This is getting into normalization of stock prices, so that they're in the same ranges. Because Amazon's at 3,000, and Snapchat's at 10. If you wanted to compare how they go up and down together, first you have to shift their values so that they are normalized into a ranges that make sense with each other. But Walmart, so let's go to SPY, which is like a 300. It's like at 400, right? And now we can see our Walmart price down here in blue. It's actually not our Walmart price. That is our Walmart minus SPY, which doesn't make any sense, but it just shows you what you can do. You can do stuff that you can't do otherwise. You can just do anything you want with this scripting. It's really kind of cool. And then eventually there's add trade. Is it add trade? Or is it, I don't know, there's something about trading, but we're not going to get into that right now. Let's look at when I was working on mid-exaggerated. The mid-exaggerated is, let's take this one out. Down here. Actually, let's move it up here. It takes that midpoint of the bottle, and it basically says if it's above the middle, send it way higher, and if it's below, send it way lower. So we can see and then exaggerate. We can get a better picture of why the lowest of the day is going to be near the bottom of the candle, and you can see how it's in the downtrends that it is. It's kind of hard to explain that, but let's go look at the code, because I don't even remember what this one looks like. I did this all. The first time I've ever looked at thinkScript was about 2 days ago. But basically, we're doing the middle point of the candle. Then we're taking the 10-day moving average. We're subtracting it from that. So whatever the gap is between the two. And then if it's below the moving average, we want our line to be even lower. And if it's above, we want it to be higher. It's just an example of doing some crazy shit. This is how you find something that no one has done before, by playing around with stuff like this. Midpoint pairs. I was playing around with comparing a different stock, Costco in this case. I'm going to do Walmart because Costco has some weird issues. And what that does is, what's that? Pairs one. Okay. It normalizes them. It gets them into the same range because SPY. Well, this is SPY, right? So pairs one. So what it does, since we're looking at SPY, it's comparing it to SPY. And since they're both the same ticker, you get this flat line. But if we took in here and put Walmart, okay, now we get this. What does this mean? That means compared, Walmart has gone up compared to SPY, and then it took a crash and went back up and then went back down. And this number is neither the stock price of, sorry about that, of neither one of these. But it just shows that overall, throughout the last year, Walmart has beaten this S&P 500 for whatever reason. And now, obviously, you can just do SPY, pairs trading. This thinkorswim automatically will do that for you with pairs trading like this. And they also have, in the trade tab, they have active trader, and then they have pairs trader, which I haven't played with, but I just know that that's there. So what we're doing here is we don't want to reinvent the wheel. We're not trying to. We're just showing you that you can get creative with your script and kind of create stuff out of the blue and open up your imagination. So that's that. If we look in here, trade volume, strategies. If you go to education and you read about, through these thinkScript tutorials, basic Defining variables, it's almost like a programming guide. But after you've played around with it a little bit, then you come back here and you're like, oh yeah, okay. See high, low. They did that. Math functions, square root. These are just logarithm, general math function, defining inputs. SMA is the average, and then the length. You can just type average. I type exponential average. Upper band. You can do a symbol comparison, plot comparison. Well, that's really interesting. That would be very cool to do. Let's try that before I sign off. Studies, edit studies, create a new one. We'll just do the Josh one. I don't know, create a new one. And we'll do plot comparison symbol. Take that off, and apply. And what is it doing? Well, I guess I have to move it down to the lower, so because whenever they're too far apart like that and you can't read it, you just need to move them down. So this is comparing what to what? SPX to Walmart, right? And the SPX, last time well, I don't know. But that's a function that we can look at and we can be like, what is that? Okay. So you can see kind of how it works. You just play around with using averages. They talk about what the EMA is versus what the regular average is. Don't be worried about this complicated formula. I don't know what it is either. And I actually took math in college. Plot. So you can do if condition, then close, else open. I believe advanced, referencing, past, future. You can also do analysis of how your algorithm would work over past data, which is really interesting. Functions, technical analysis. It explains to you what all these things are, like EMA2. How's that different from EMA? What's median? What is... And then finally, where do we get how to trade, right? Like we haven't got to that. But this is really just to get an idea of what you can do. And it's most fun to actually type something. I think it's most fun to actually type something directly into your own thing and make it plot something. It's really cool. Plot. This could just be data. It doesn't... Data profile. I don't get that. I don't know why this has to be data. Same thing. Like there's keywords for what it's going to plot. Anyways, once again, plot data. It doesn't need to be that. It doesn't need to be that. The symbol, but just shows you can plot a different symbol's data from the one that you have selected here, but it'll still use the same thing. On top of that, if I want to do plot, I can duplicate this Josh one. I can hit edit, duplicate, and then I can say like a Josh 2, and then I can say plot the, let's say, EMA 2 of the symbol. And now it's in red, which means that there's an error with that script. What isn't it like? Incompatible PAL. So I think that this has to have a comma like 20 or something. There, yeah. So you have to tell it when you're doing the MAT, you have to tell it how many. It doesn't have a default. I think. Nope, still says it's red. So let's just do average. Okay, I see what's going on. We have to say we can't just put the symbol in there. What were we doing before? Right, this was like high, right? Like, okay, so that worked of that symbol. So if we do the high of that 20, I don't know. I'm totally getting confused now. And then if we do that symbol of the high of that symbol, come on, 20. Now we get something else. Okay, Josh 2 is up there. Let's move this down. The volume, that's the volume of that. Okay, so now we have, now we don't know what we have. We're doing Josh 2, so that is SPX. And this is Walmart up here. So we have two separate graphs now on our thing. And it just shows how you can get a different symbol from the one you're looking at. Next time we will look at detecting when two averages cross. So if the near-term average of the last few days crosses over the average from the last month, that's something that can tell your script, hey, send an alert. Let this person know that this just happened for this ticker. And then if it did it for another sector ticker in the same sector, you know, you could, whatever, you know, you can start to build your own thought process for how you're looking at these things if you're into programming. So that's introduction to script from someone who doesn't even know how to use it, which is kind of nice sometimes, I would think. And yeah, let's see. Did we cover everything? I think that was it. So, another video. Take care.